We and our partner Allseas now have the definitive agreement for the operation of our first production system. We have an accelerated permitting path, and data is telling us that there are no showstoppers in terms of the permitting process.
Welcome back to Rockstock Channel. It is Monday, May 18th, and we're back with Craig Shesky, CFO of the Metals Company. A lot has happened over the 2 months since we last spoke, both for TMC and in the broader market narrative around national security, AI infrastructure, critical minerals, and America's industrial base. In my March Lithium-ion Bull newsletter titled Blood in the Street, Buy the Dip, I argued that TMC and Hyperion X represented two misunderstood and potentially asymmetric national security stories in the public markets today, companies attempting to create entirely new industries in strategic materials. I see Crocodile Dundee Australians, Jared Barron, and Hyperion X founder Tazo Arima as real-life Hank Reardons, visionary Atlas Shrugged entrepreneurs, innovating critical minerals industrial capability in U.S. capital markets. I also note that both TMC and IPX were strangely absent from Morgan Stanley's National Security Index of 39 companies published last year, which led me recently to dig into one of the names in that index, nuclear SMR developer Oklo, which at roughly a $10.8 billion market cap trades at nearly 5 times TMC's valuation, despite having materially higher long-term capital requirements, more moving parts, and many more years before potentially reaching meaningful revenues. In my February blog post, Which Critical Minerals Matter Most, I argued that the biggest equity upside is likely to come from the medium-sized, faster-growing critical minerals where supply chains are fragile and strategic value is underappreciated. 3 of TMC's 4 core metals, nickel, manganese, and cobalt, fit squarely in that bucket, with copper serving as the broader electrification and AI infrastructure thematic. In other words, in our golden age of electricity, TMC is directly tied to defense demand, robotics, AI data centers, and batteries. Tightening Indonesian nickel policy, copper prices at all-time highs from AI infrastructure and grid investment, and growing excitement around manganese-rich battery chemistries provides TMC with substantial commodity price optionality to the already strong economics presented in their PFS last year. Jeff Curry, the former Goldman Sachs commodities chief, now at Carlyle, just joined X last week with a 10-post thread reiterating his grand rotation thesis, from overvalued tech to undervalued old economy. That is, those on the receiving end of the Mag 7's hyperscaling CapEx. Jeff smartly reframes the halo investment thematic from heavy assets, low obsolescence, to hard assets, local operations, supporting the reshoring of supply chains narrative. My only quibble in my response to Jeff was his focus on molecules, namely oil, but not electrons, and the battery and magnet materials needed to power AI infrastructure, robotics, electrification, and defense systems. But the oil analogy resonates, as what TMC is doing mirrors the creation of the offshore oil industry decades ago, a sector initially viewed as technologically risky and economically uncertain before ultimately becoming a foundational source of global supply. Today, offshore oil accounts for roughly 1/3 of global petroleum production. TMC at $2.3 billion market cap is about an 80% discount to the $10.8 billion investors are speculating Oklo will successfully pioneer in the SMR and adjacent nuclear industry revenue streams. Yet TMC is much further along the traditional industrial de-risking curve, with SEC-compliant reserves, a completed PFS, strategic investors and partners, a defined U.S. permitting pathway, and now a signed production agreement with Allseas, targeting commercial production around 2027. The last few weeks may ultimately prove to have been some of the more important in TMC's history. First, NOAA determined TMC USA's consolidated application to be in full compliance with the requirements of the Deep Seabed Hard Mineral Resources Act, another key step toward a commercial recovery permit which management continues to guide is on track for Q1 next year. And second, TMC and Allseas signed their production agreement for the first commercial polymetallic nodule collection system, a major execution milestone that moves the story further from concept to industrial deployment. In my opinion, two keys that could unlock TMC's valuation disconnect with Oklo is the permitting process and the general discourse coming from Washington. The Trump administration has been unequivocal in its support for nuclear and SMRs, which has clearly helped fuel Oklo's market narrative. TMC, of course, has benefited from positive statements and executive orders, and Jared's repeated appearances before Congress, but a formal U.S. permit remains a key de-risking catalyst. TMC has consistently articulated a capital-light strategy offshore and careful focus on minimizing equity dilution. Further, Allseas will fund a significant portion of pre-production costs. In addition to $120 million in cash, TMC increased its financing flexibility last month with $200 million mark-to-market equity value via the Metals Royalty Company, which went public last month on NASDAQ. So, Craig, I think the question for investors today is how the sequence of permitting, financing, strategic partnerships, and commercial execution unfolds over the next 12 to 24 months, and whether the market eventually begins valuing TMC less like a speculative mining concept and more like a strategic industrial platform being built at the intersection of critical minerals, AI infrastructure, and national security. But before we begin, we'd like to thank our new sponsor, Clean Elements, an investor group focused on providing growth capital for critical minerals developers focused on the energy transition. Clean Elements has invested over $30 million to date and is currently the largest shareholder of both Galan Lithium and NOAA Lithium Brines, two companies developing high-grade lithium brine projects in Argentina. And a reminder that RK Equity is an advisor to and holds equity interests in the metals company. But we are not financial advisors. This video is for informational purposes only and should not be considered investment advice. Please do your own research and read the disclaimer at the end of this video. And with that, Craig, welcome back. I'm going to starting with NOAA, the permitting authority. Management continues to guide toward a potential commercial recovery permit in Q1 next year. Since the full compliance determination in late April, what specifically has changed in terms of investor confidence internally and operational readiness at TMC?
Yeah, first of all, it's always a pleasure to be here, Howard. And it's a good question to start with because I think it's the most important question. On the permitting side, that's always been the element that was holding some investors back. We have a very clear permitting path now, and actually an accelerated permitting path through a new consolidated process that NOAA finalized late last year. And then it was January of 2026 that the final rule was put in place, allowing a consolidated application for exploration and commercial recovery. Now, it was always a sequential path prior to this in the existing NOAA rules, because no one ever anticipated that there would be an operator like TMC who would have already done the requisite environmental resource definition, test mining, mine planning, pre-feasibility work. So we've already ticked many of those boxes, and this allows us to put ourselves on this consolidated, expedited path. And since we applied under this consolidated process in late January, we've already seen substantial compliance in March, full compliance in late April. You can continue to see every 6 to 8 weeks another milestone ahead of us leading to our expected permit grant date in the first quarter of 2027. So there is the fundamental basis of this application, and that is the environmental data, which TMC continues to share openly with the entire world. And that data is telling us that there are no showstoppers in terms of the permitting process. And that environmental data agrees largely with some of the conclusions that our regulator, NOAA, came to in the late 70s and early 80s in their own studies in the Clarion-Clipperton Zone on nodule collection. So we feel we're in a very firm footing, but we're in a unique position, truly as the only applicant here that has done the requisite work, spending $700 million to date over the last 15 years to put us in this position to be the first mover. So it has been a long time coming, but the reason we have such confidence in that permitting timeline is I believe we have all of the answers to the questions that a regulator will have. Now, there are certain elements of the process, such as multiple public comment periods, 2 periods each of 60 days. Those are elements of the process that cannot be compressed. There are other elements of the process that perhaps could happen a bit quicker than one might anticipate. So we feel very good about the first quarter 2027 target date. And I think, perhaps this dovetails into some of your other questions. The fact that TMC and Allseas inked our agreement earlier in May, I think shows the confidence that both we and Allseas have that this permitting process is well in hand and on track. That's not to say there are any guarantees, and certainly we will welcome all the feedback that comes in from the public, but we feel very good we have the answers to all those questions, and that's why we have the confidence to get ourselves ready for commissioning the offshore system in late 2027.
Okay, you did take my next question there on Allseas. Could you, I guess, just detail for investors what that agreement said and what are the most important takeaways we should understand beyond just the headlines?
Sure. With Allseas, this is a partner who's been with us since 2019. They've invested a lot of money on their own balance sheet. They've invested a lot of money in TMC. Their position in TMC stock is, worth several $100 million, and they have agreed to fund a significant portion of the pre-production development costs. For example, the anticipation was TMC might spend $490 million of pre-production development costs on the Hidden Gem vessel. We think there's an opportunity to compress that. So we and our partner Allseas now have the definitive agreement for the operation of our first production system. It's been a long time coming. We've been talking about this for years. In fact, we had a press release about 3 years ago talking about how some of the key terms of that agreement were coming together on the heels of what was a very successful collection test in late 2022, where we and Allseas collected and lifted to the surface 3,000 tons of these polymetallic nodules. I always show it, but I'll show it again. This is what one of these nodules look like with nickel, copper, cobalt, and manganese. But it was such a successful test that we started hashing out, the goalposts really of what the commercial agreement might look like. The one thing that was holding back investment from both Allseas and TMC was regulatory certainty through that International Seabed Authority. Now that we have pivoted to a more transparent regulatory process through NOAA underneath the U.S. Department of Commerce, I think that's giving us the confidence to push this forward alongside our partner. I would note, too, that we put out, as you said earlier in your intro, a pre-feasibility study in August of 2025. We had a pretty good sense of what those operating costs with our partner Allseas were at that time. So, yes, things have changed since that point marginally, but overall, we've had a good sense of where things are going to end up. So we feel good about some of the numbers that went on that PFS. And frankly, we see opportunity now, potentially on the processing and refining side, to improve our operating unit costs. And as we detailed for the market last week, Rutger Boesland, our Chief Innovation and Offshore Technology Officer, he joined us from Allseas. He was the one who designed the collector vehicle that had that successful test in late 2022. He worked on the Pioneering Spirit, the Allseas production vessel that's the largest construction vessel on Earth. These are very talented engineers, and he and our team have been identifying areas where we can even further reduce that offshore unit cost through many things that we think over the next few years we can provide additional detail on to the market. So bottom line, Howard, this is the culmination of many years of work. It's the codification and solidification of some of the operating capital costs that we have with our partner Allseas. But the bottom line is we are very aligned in terms of our interests. They're a major equity holder in TMC. In fact, they're about a 14% shareholder. And I think that shows that both we and Allseas have confidence that now is the time to move this forward.
Okay, was that gentleman the one who spoke on the conference call last week?
That's correct.
Okay, I'd encourage all viewers, in addition to watching this video, we're going to link in the show notes here to the webcast of Jared and Craig and this gentleman's comments, which actually through the visuals, just reflect, again, how this whole process is going to work. And also there were some very good details there about the specifics of the permitting process as well. I found that call to be very useful. I don't want to reiterate it all here today. So to encourage viewers to click the show notes and register to listen to that webcast. So I'm going to pivot. Another thing that you mentioned in that was you now have TMCR, the royalty company, trading publicly on NASDAQ. Remind us who that is, because they also did another royalty deal, and how strategically important is that vehicle for future non-dilutive financing flexibility?
Yeah, TMCR is a very close company to TMC, but we are 25% equity holders in it. They are a separate company. And it stemmed from the original transaction that we did with the predecessor, Low Carbon Royalties. That was announced in February of 2023. That was a transaction where they gave us a bit of cash. We took an interest directly in that company, about a third at the time. It's been diluted slightly since. And it included some producing natural gas assets in Colombia. And also, TMC contributed a 2% top line royalty for our NORI area. That royalty can be bought back through cash flow, naturally through a self-funding buyback mechanism, which we anticipate to take advantage of in the coming years. And that would likely go down to 0.5% of top line royalty. But bottom line is now we have a 25% stake in a company that's trading, about a $900 million market cap. So, we are over 200 million in terms of the value for TMC represented by that stake. We have no intention, of course, to take advantage of that liquidity. It's a nice tool, however, to have in that toolbox. They also announced the Mesabi Metallics royalty acquisition for DR grade iron ore pellets in northern Minnesota. It's close to my heart because I actually worked for Cleveland Cliffs in their pellet operations at Empire and Tilden in Upper Michigan. When I was a little kid, I actually used iron ore pellets for my slingshot because they were everywhere. You just walk down the street and pick up iron ore pellets. So it was always pretty fun. But these pellets are very important. They're important for the green steel industry. And, frankly, I think they have a very large pipeline at TMCR of other potential acquisitions in the future. So it's an exciting time. But yeah, it is a vehicle through which TMC can potentially raise funds as and when needed.
Right, and TMCR is founded by Brian Pays Braga, and he and others wrote a check, I think, at $3 last year, in addition to being an investor in earlier rounds in TMC. I did iron ore for a number of years, and I remember direct reduced iron (DRI) pellets were always had a big future 10 or 12 years ago from a more clean steel environment. Anyway, we hope to have an opportunity to speak with Brian and understand more of their royalties in the not too distant future. But let's pivot. Last year, the narrative around TMC was largely, kind of, can deep sea mining happen? This year, the conversation increasingly feels more like, how fast can this commercial system scale? Do you feel the market has properly appreciated how much technical and operational de-risking has already occurred?
Absolutely not. The market is not appreciating it. I would encourage, in fact, look, I've been talking to investors over and over since our earnings call. And, one of them said, yeah, the more I peel back the onion, the more clear it is that this is on very solid footing. I think people go in, as I used to do as, a buy-side analyst, you have your initial assumptions, and it's easy to think of reasons not to do further diligence. And something that's relatively new, something that nobody's done before at commercial scale, although the technology to do it has been around for a long time, it's easy to say, all right, too hard, moving on. And I think that's why a lot of people are missing a huge opportunity where TMC is currently trading at a massive discount, over a 90% discount to what I would say is the discounted fundamental valuation of the $24 billion for our PFS and our initial assessment came out in August of 2025. So yeah, I think the market's still missing it. But I'm starting to see that change bit by bit. You're starting to see larger banks get involved. You're starting to see more capital flow to this industry. It was good news to see AOMC and OMEX talk about a capital raise and a potential merger. And, anytime you have Tom Albanese, former Rio Tinto CEO, putting his weight behind the industry, Mike Rowe, who I'm a big fan of, his podcast and, Dirty Jobs, Deadliest Catch. He's one of the co-founders of that company. That's all great to be able to say there's capital voting with its feet coming to the U.S. process, deeming it to be investable. But I think they would tell you, anybody else in this industry would tell you, TMC remains the leader. We are pushing this forward, and we're the ones who are commercially ready. And we will be the first to do it at scale and take advantage of that first mover advantage, which truly can be important, not just on the offshore side, But the technology to collect rocks, other people will be able to do that. Other people will be able to lift them. It was in the 1970s that Lockheed and BP and Shell and Sumitomo, many of these original pioneers, all showed that they could do that offshore collection at scale. The onshore processing and refining is another area where I think TMC has a big lead. And we could really be the central ecosystem, potentially, of a hub domestically for the United States in the processing and refining of nodules in this industry. So it's a very exciting time. But no, I do not think the market is accurately reflecting how de-risked this is. And sometimes I bang my head against the wall and wonder, am I not telling the story correctly? What else could we be doing? And we're leaving no stone unturned. But I think there's a natural progression here where people are starting to get it. You're really starting to see the light bulbs turn on.
Well, you made an interesting comment about, I forget the names of those other two, or that merged company that Tom Albanese is associated with, but it's creating more public companies in the seafloor mining space. So it's not just you're the only one, and therefore investors may say, oh, this is a bit off piece. Now it's kind of like a category, which I think is interesting. On the other hand, when I referenced Oklo, right? Oklo is the only way to kind of play SMRs, right? So there's an argument like, are they getting scarcity value as the only player, kind of in that space, which leads to like this question. There's huge investor enthusiasm about AI infrastructure and energy security stories like nuclear, power generation, grid build out, reshoring, defense supply chains. Do you think investors are beginning to connect, polymetallic nodules to that same strategic industrial narrative?
Without question. And one of the reasons for it is the geological nature of these nodules. It is relatively easy to collect them and bring them to the United States. There is a natural advantage here that companies like TMC have over some of the other competitors in the offshore space from China. And there are three Chinese contractors, Beijing Pioneer, Comra, and China Minmetals, that are pushing forward and trying to catch up. But it's one of the rare areas where the U.S. actually has the ability to keep and maintain a lead. So it would be a shame to squander that. And I don't think the U.S. is going to squander that. I think the U.S. sees the opportunity here and is going to support it. So it's hard, Howard, to look at the tailwinds here, whether it's politically, whether it's geologically, whether it's, from where the world is heading in terms of AI and industrialization and, supply chain bifurcation. Every one of these tailwinds is a positive for TMC. So sometimes you put your hat on and say, all right, what am I missing? What are the real risks here? I think these tailwinds are very clear. Plus, you're applying those tailwinds over a story where there's already a massive discount to fundamental valuation. So yes, I think we fit firmly within that reindustrialization theme. But I think there's a long way to go here. And I think we're still very early innings in terms of people recognizing just how powerful this could be. Take one ship. If we're just talking about one vessel, the Hidden Gem, going at full nameplate capacity, 3 million tons per year, you're talking about between 25 and 35% of U.S. needs currently for nickel and cobalt, just from that ship's worth of production. That's a huge amount. And of course, even manganese, one ship's worth of manganese fully processed, you're close to 100% of U.S. needs. So we would have the opportunity in the United States to become a net exporter of manganese. So this is a huge scale. This isn't a marginal asset. This is something that can truly transform the metal supply needs of the United States, and therefore really kick off the next era of U.S. manufacturing dominance.
Okay. And you took a little bit from my next question here to speak specifically about the dynamics of the metals themselves. So again, TMC has exposure in nickel, cobalt, manganese, and copper, all tied in different ways to batteries, defense, AI infrastructure, robotics, and potentially space. We have SpaceX kind of coming up, and there's a number of people asking, what a derivative plays, for that. So how should investors think about commodity price upside versus the prices assumed in the PFS, particularly given recent Indonesian nickel policy, copper strength, and the growing interest in manganese-rich batteries?
You nailed it again. I think those are all very key themes. And we did get a little flack from some people about the prices used in our PFS because there are a few elements where nickel was a bit below what our projections were. Cobalt was a fair amount below what the projections were that we pulled from third-party sources. So we weren't just putting our fingers in the air here. These are projections from credible sources. And now we're basically on top of where those numbers are. Nickel's still a bit below, copper's well higher, cobalt is higher. So I think those price assumptions were pretty accurate, but the nice thing is there's a margin of safety here based on the basket of commodities that we have. And we would anticipate rolling all of these four metals into nickel equivalent being in the low first quartile of the cost curve. So even if prices dip 10% instead of rally a significant amount, which I think will happen, TMC is going to be in good shape. You mentioned too the Indonesia story for nickel. I think it was Bank of America and their European Metals and Mining Conference today. The headline note from that conference was nickel is now in deficit again, in part because Indonesian policy is getting a little tired of output at any cost. And there has been a view from China and a lot of different commodities to say, hey, if there's a new emerging technology, we're going to flood the market and kill investment in this new technology and keep our dominance over market. They've done that in a lot of different metals. I think they've tried to do it in nickel. I don't think it's going to work. I think we have a truly competitive, low cost and lower carbon, better for the environment source of this material that can be easily brought to the United States. And I really don't think Indonesian nickel laterite can compete with it in the longer term. In fact, the grades of Indonesian nickel laterite continue to go down. So it's something that we watch closely. You mentioned Jeff Curry at the beginning, and I, of course, borrow a lot of his statements because I used to read all his material on the buy side. And yeah, commodities are not always anticipatory assets. So we all see where these metal prices should be going. They should be going higher, but the market often doesn't react until it punches you in the face, because a lot of these markets are driven by short-term inventory swings and the whims of commodity traders with 3, 6, 9 month trading horizons. So I think it'll happen, but I think in any case, TMC is well set up. It's not like a lot of other projects where perhaps if this metal price goes down 10% and it takes you 5 years to build out something onshore, you may no longer be profitable at that time. We feel we're hedged in really any conceivable commodity price environment.
That's great. Just a few more questions on processing. How should we think about your Brownsville your option, tolling, Japan, and overall U.S. industrial policy alignment? Is there a preferred path emerging, or is optionality itself still the key strategic advantage?
Optionality is great. I think I would stick to our public disclosure in that we think Brownsville, building that sort of processing hub domestically, makes sense for a lot of reasons, particularly in that plan would be contingent upon government support. So we're not just going to go out and build something on spec. In fact, the site that we chose, you mentioned SpaceX, it's just down the road from where they launch their rockets, which, by the way, use a lot of nickel. But I think taking a step back, looking at the regulations here, looking at the Deep Seabed Hard Minerals Resources Act that the U.S. put in place in 1980, signed by President Carter in 81, the implementing the regulations for mining commercial recovery in 1989, there is a view that you have to bring the material to the United States and that you should be able to process and refine domestically if it's economically feasible to do so. Now, currently, there isn't the infrastructure to do that. So if one wanted to get exemptions from the U.S. government, you could do that. But to make this, I think, insulated against any changing of political tides over the coming years and decades, one of the great ways to do that is to say, not only are we collecting nodules 1,200 miles off the coast of San Diego, but we're also producing, tens of billions in GDP. We're producing many thousands of jobs. That's a good way to ensure that your project can withstand whatever the political winds might be blowing at in the years ahead. So we think that's the preferred path. But the nice thing about this resource is it is a conventional technology for processing, and there are plenty of rotary kiln electric arc furnace lines around the world to take advantage of. But I think ultimately, pending government support, doing something domestically in and around Brownsville or elsewhere in Texas, that's not the only site, but certainly that's one area we have focus on. I think that's the long-term way to ensure resiliency across the commodity cycle.
Okay, that makes sense. And I'm just thinking, like, you're lifting nodules, right? And you could bring those nodules anywhere. Brownsville is where one option where you would process them. I'm I'm wondering, could there, with Project Vault and stockpiling and all the talk, in the U.S. government about that, could, because your resource is huge, right? And Indonesia in nickel went from 10% of the market to 50% of the market, and that's largely China controlled. So I'm just wondering, like in nickel, could this be like a swing supplier, strategic? Is there some strategic stockpiling, idea that's connected at all to your thoughts or any of your discourse in Washington, without obviously getting ahead of that?
Yeah, look, stockpiling's been raised as an idea, even stockpiling the nodules themselves. We want to think bigger than that. We want to say, all right, we have the nodule, that's fine, but we could turn it into intermediate material. We can turn it into alloy. We can turn it into matte. We can turn it into metal. We can turn it into sulfate. We can turn it into PCAM. We can take it as far as the market wants us to take it and increase our payables as we go step by step down the road. So I think the window is open here for us to think bigger than that. It would be easy just to say, let's get a permit, let's hire a boat, let's go pick up rocks and leave it on shore, and somebody else can deal with it. I believe that we have the right team, the right processing technology, and the right partners, and potentially the right financial supporters and the right government support down the road to help solve that equation, rather than say, all right, let's just stockpile the nodules and hope for the best. Because the U.S. truly does need their own domestic capability for processing and refining nickel and cobalt and manganese. There's some other projects that are looking to do that. There's an extension, for example, of the Eagle mine run by Talon in Upper Michigan. But these aren't things that in and of themselves can solve the issue. So longer term, I think the window is open now to think bigger, and I think TMC is doing that.
Okay. I mentioned Oklo before as a nuclear play. You said that the market is connecting, you to the strategic industrial narrative, but you also said you don't believe the market's fully appreciating, how much de-risking has already occurred. And we also mentioned Goldman Sachs. I'm a Goldman client, and I did I kind of wanted to see, if they covered Oklo, and they did cover Oklo. And they have a target price and a neutral recommendation, as based on about where they are, but they justify that it's fairly valued at 10.8 billion market value based on an EV to EBITDA multiple on 2035, EBITDA, right? And then discounting that back at 15%. And they expect that company to need something like $14 billion in CapEx through 2040. So as I was reading it, I was just like looking at this and saying, this looks to be much more risky, much higher CapEx, but the market is valuing it, on 2035, EV to EBITDA discounted back. You've argued, like in a mining industry multiple point of view, look at our NAV, and we're trading at a discount to NAV. And you are also saying that investors are kind of connecting, these dots. Like the Morgan Stanley had this national security index. Oklo is one of the 39 companies. TMC was not. That could be an argument as to why, maybe generalist investors are playing into that. But I'm just trying to I see a valuation disconnect. You're trading at an 80% discount to Oklo. And for any Oklo viewers or investors, of this video, I think they could turn their attention to a similar way to play, a national security, AI, defense, infrastructure story that they don't understand. So anyway, if you could just answer that however you want to answer it.
Sure. Well, look, they're a great company, and I think, TMC is undervalued, but I do think a lot of people who, made some money in Oklo have brought up in some of my investor meetings the fact that, all right, they asked some analysts what's next, and many people said TMC. So I appreciate that overlap, and I appreciate people being able to use that pattern recognition and apply it to something that feels a bit new. The really nice thing about what TMC is doing is that our ramp up can be done both offshore and onshore in a measured way. It's something where, what is the limiting factor to how quickly we can ramp up offshore? It's, all right, how many ships do we get at a large discount? Because you're taking drill ships and converting them as opposed to building new ships. Down the road, there will be an industry where people are building purpose-built ships with 3 collectors on them, and that'll get even more efficient. But we have the ability to ramp up, to de-risk, to revalue, to then ramp up a little more, and doing it in a more modular way offshore. And then onshore, the area we are looking at Brownsville, for example, we have a lease or an exclusive right to negotiate a lease option over an area where we'd start with a relatively small footprint and then grow bigger and then potentially grow into a giant industrial park. But it's not anything that you have to do right away. You can do this in a very modular ramp up plan. So I think one of the great things about this industry is the nature of the resource sitting on top of the seafloor requires very little fixed infrastructure. And the infrastructure that you would need for the processing and refining can be done in a thoughtful way with government support that allows you to take advantage of the declining costs of capital and ramp up in a way that maximizes return for shareholders. We are fiduciaries. We care very much about the return on invested capital for our shareholders. We care a lot about dilution. And, there are a lot of banks. You might say, well, why isn't everybody on the street covering TMC? Well, look, we've been pretty good about not paying a lot of banker fees over the last 5 years because we've done a lot of capital raises ourselves. We do have great research analysts who cover us. We have 8 people who cover us, 2 of which publish and make it available for retail investors as well. So there's no shortage of people looking at this story. But it's a bit of chicken and the egg. We could go out and, raise billions of dollars and, pay a lot in banker fees and dilute shareholders. And then maybe, the story would be a little bit, across the desks of more generalists. But we've done this in a very measured, capital efficient way, trying to avoid dilution as much as possible, raising funds from credible investors such as Allseas, the Hess family, Korea's Inc., and many others, Andrei Karkar, our largest shareholder. Those are the people that we've raised money through.
And that gets back to the lithium bull that I wrote earlier. In general, my investment philosophy, I find founder owners, right, are like Sigma Lithium is another one. Mineral Resources is another one where they own a lot of the equity. They're the most careful about dilution than someone who is just a hired hand, CEO or comes into something after so much of the dilution has already happened. So hats off to Jared Barron. He's got the nodules to do it. As you often said, run TMC using a favored music analogy that I always like to do, but you actually had that one before me. So I'm just repeating your narrative. Finally, Craig, just if we're sitting here 12 months from now and TMC has successfully navigated the NOAA process, what do you think the market will understand about the company then that it still fundamentally misunderstands today?
I think the market will understand that there's nothing stopping this industry. There's nothing stopping the company. And I think you will continue to see more people come to us as really what is going to be the center of gravity in this new space in which the U.S. has the opportunity to dominate. So I think what people are going to understand is this should be worth a hell of a lot more than it is right now. And I think by then, once you're post the grant of a commercial recovery permit, it would be very odd. I'm trying to think of reasons that this wouldn't be far higher in terms of the share price at that point. Now, one could look at the milestones we have ahead, and they're very predictable. So anybody who, wants to get the best return possible, now is the time to come in. Because the more you look at the NOAA review process, the more you look at the data that we've produced, the more you look at the fact that TMC is ready to go with a PFS, with a partner, with a ship. I think you can conclude that this truly is happening. So rather than wait until everybody and their mother goes and buys a stock after the permit grant, there could be a lot of good money made today.
Very good. So it sounds like in 12 months, we'll move from Run TMC to Ain't No Stopping Us Now.
I always love your music references, Howard. Yeah, good songs both. We'll have to get some new t-shirts printed.
Okay. Thanks very much, Craig, and look forward to continuing to follow the story and great milestones forthcoming.
Thank you, Howard. Appreciate it.